distinguished group of leaders to talk about all of the issues facing the global economy. Joining me is Christine Lagarde. She is the ECB president, managing director of the IMF, Kristalina Georgieva, the chair of the Federal Reserve, Jay Powell, and from Indonesia, the Minister of Finance, Sri Mulyani Indrawati. And then joining us remotely, we've got the Prime Minister of Barbados, Mia Mottley, who couldn't be here today, and she is in sunny Barbados. We're all jealous, and we're happy to have everyone here, the most powerful women in the economy, and Chair Powell. Welcome.
Chair Powell.
So we came here today, and we thought we were going to be discussing this year the recovery
Chair Powell.
from a brutal 2 years of COVID. And instead, we've got the Russian invasion in Ukraine. We have that influencing prices and inflation. We have a dramatic shift in policy, and
what up? Welcome back, everybody.
In China, and all of that is distorting and depressing the global economic outlook. So maybe, Madam MD, if you could just kick it off and set the stage for us, because you did cut your outlook for the global economy.
Real quick.
It is quite.
Real quick, thanks for joining us, guys. We're going to be watching. This is international monetary debate. Something Chair Powell is going to be speaking. We're going to watch it as we do with the live Bitcoin chart. It's great to have everybody. I'm going to shut up. We'll get this volume on. And don't forget to smash the likes and subscribes for the stream. We're going to be doing some TA, looking at some charts. But let's hear what they have to say.
More significant revision downwards. Would there be more? It is to be seen. It depends on how long.
Yes, as I legally have to do, shout out to our sponsors, Phemex and Market Cipher, for sponsoring this stream. Check them out in the video description below, and let's go.
Is there something else to hit us? We do live in a more shock-prone world. If anything we learned in these 2 years is that we have to be more agile to build more resilience to these shocks. And one of the objectives of us meeting here in Washington is to talk with each other and identify what is the policy combination that can deal with these short-term challenges without jeopardizing longer-term sustainable growth.
Well, we do have a good mix of fiscal and monetary leaders here on the panel. So just to follow up quickly, Madam MD, as far as the outlook and the deterioration, how close are we to something like a global recession?
Well, we are still very much in positive territory. Growth projection for this year, as you said, 3.6%. Let's remember that was the average growth rate between 2011 and 2019. We have only small handful of countries that are in negative territory. Among them, Ukraine, devastated, shrinking by 40%. Russia, very significantly, in fact, impacted, 11% below what we projected in October. But most of the countries are growing, although slowly. What is the big problem, Sarah? The big problem is that the exit from the pandemic-induced crisis is now slowing down for the future. Just one number. Emerging markets and developing economies will be still 6% below their pre-pandemic trend in 2026. This is 2 years or more delay in their recovery. What is my biggest worry? With food prices, energy prices up, with prospects for recovery much worse, are we going to see the phenomenon from 2019, people on the street, unrest, creating more difficult environment for policymakers to do the right thing?
Yeah, we're going to get into some of those risks, but I do want to hear the individual outlooks, especially from Europe, President Lagarde, because of its proximity to Russia and Ukraine, the spillover effects that you're seeing, and now there are concerns about stagflation there and the effects where it depresses economic growth and drives up prices. So how much has the outlook for Europe changed?
Chair Powell.
It has changed exactly in the same direction as indicated by Kristalina. So it's been a haircut to growth projections, and it's been a rise in the inflation numbers. And certainly when we look at the risks, they're skewed to the downside for growth, so there might be more cuts to come, and to the upside for inflation. That's where we are. And it's particularly saddening not only because of the death, not because of the destruction, not because of the devastation, which in and of itself is a cause for huge concern and sympathy and support for the people of Ukraine, and blame for those who took the initiative of that unjustifiable invasion, Russia. But it's also causing harm throughout the world, predominantly in Europe for the moment, but it will, there will be ripple effects going way beyond Europe. For the moment, as you said, geography plays a role, and Europe is literally next door. Ukraine is one of us, and taking this horrible hit. We are seeing refugees out of Ukraine into many of our European shores and countries, and we have to, by solidarity, do everything we can to support them. That's the situation that we have at the moment in Europe. It is particularly saddening as well to see that the recovery that we were embarking on is being stalled to a certain degree by what is happening out there.
What if Europe takes another step and does ban Russian oil, gas, and coal? What would happen to the European economy?
Well, let me just first of all salute the sanctions that were decided on a pretty global basis. Sanctions against the oligarchs, sanctions against the family members and the people at the origin of this unjustifiable war. De-swifting of about 80% of the banking sector of Russia, and also freeze of the assets of the National Central Bank of Russia that could be identified outside of Russia and a couple of other countries. So this bulk of, there were 5 set of sanctions decided one after the other, has clearly had a massive impact on Russia. And will continue to have an impact. And I think we will, the more it's rolled out, the more impact it will have. Obviously, the next question that everybody is agitating and considering is what happens with the oil on the one hand, the gas on the other hand. I think the issue of coal has been addressed by the European.
Really quick here, something really important to understand is energy is the core of economy. When the cost of energy goes up, the cost of everything goes up. And this is doubly true in our crypto world. Literally, the cost of Bitcoin, yes, you can talk about hardware, but in reality, the cost of mining Bitcoin is energy. Energy is a big point. It's going to be a bigger point going forward. And for us, it's going to be the fundamental resource for cryptocurrency and proof of work. So
now about your claim that we're not heading toward recession.
That's a lie.
I guess I'd start by saying,
or because we're already there,
unified with our allies around the world in opposition to the invasion of Ukraine for no reason, and the human suffering that's going on there. And while these economic matters are important, there are very fundamental things at stake there that we want to keep in mind. So in terms of the U.S. economy, we are a bit more remote from the immediate effects of the war compared to Europe, for example. But we will be feeling them over time, and they will come in the form of upward pressure on inflation, further upward pressure, and a bit of downward pressure on output. But the U.S. economy is very strong, performing very well. By most forecasts, we'll have another strong growth year this year. The labor market is extraordinarily tight, extremely tight, historically so, and to the point where really there's an imbalance between supply and demand for workers. And of course, the big issue that we're very focused on is inflation, and getting inflation back down to our 2% goal.
But if we start to slow materially in our economy, will you stop tightening even if inflation is still above your target?
Well, so first of all, you asked about a soft landing. Basically that's our goal. Our goal is to get demand, use our tools to get demand and supply back in sync, so that inflation moves down, and do so without a slowdown that amounts to a recession. That's our goal. And I don't think you'll hear anyone at the Fed say that that's going to be straightforward or easy. It's going to be very challenging. We're going to do our very best to accomplish that. And it's absolutely essential to restore price stability. Without price stability, really the economies don't work without price stability. We need that to have a strong labor market for an extended period of time. We need it for financial stability, so we must do that.
The market has 3 50 basis point hikes coming at the next 3 meetings as of this morning. Is that reasonable?
So I don't try not to comment on specific market pricing for things, but I will just say this: at our last meeting, and this was in the minutes from the meeting, many on the committee thought it would be appropriate for there to be one or more 50 basis point hikes.
Are you one of those people?
I don't disclose my own path. I try to lead the committee, but so I think markets are processing what we're saying. They're reacting appropriately generally, but I wouldn't want to bless any particular market pricing. The thing I want to say though is we really are committed to using our tools to get 2% inflation back. And I think if you look at, for example, if you look at the last tightening cycle, which was a 2-year string of 25 basis point hikes from 2004 to 2006, inflation was a little over 3%. So inflation is much higher now, and our policy rate is still more accommodative than it was then. So it is appropriate, in my view, to be moving a little more quickly. And I also think there's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So that does point, that points in the direction of 50 basis points being on the table. Certainly, we make these decisions at the meeting, and we'll make them meeting by meeting, but I would say that 50 basis points will be on the table for the May meeting.
Minister Miliani, are you more worried about what Fed Chair Powell is doing, or about what we're seeing in China right now with these aggressive lockdowns because of COVID as it relates to your economy and the region and emerging markets?
Well, United States and China, the two biggest economies in the world. Whatever happened in these two economies definitely have a spillover to the rest of the world. First, I think what Chairman Powell mentioned about the challenge to stabilize the price inflation down definitely will require monetary tightening, and that has been communicated. We are talking about well-calibrated, well-communicated, well-planned. So even though we cannot avoid that direction of policy, at least market as well as many policymakers in the emerging country and developing country need to prepare for this eventuality. I think that's one very important thing. In Indonesia case, back in taper tantrum in 2013, our situation today is much stronger. Back then, our external balance, the balance of payment in a current account deficit, and that's why even when Federal Reserve has not yet moved announcing it, it's already creating a huge jittery. Today, Indonesia, again, because of the war, unfortunately, but then creating this high commodity price, Indonesia has quite a significant commodity which is enjoying this high price. It is not appropriate, morally wrong if I'm saying that we are having the benefit of this situation, but it's our export grew by more than 24% last year, and in this first 3 months it's actually growing even higher than that. So we are enjoying surplus on trade account as well as on my budget. So we are in a position of strong position in which then this kind of situation, hopefully we are going to be much less affected. Although capital outflow is happening already on a bondholder in Indonesia, and in this case, we've already reduced the exposure of the foreign ownership on our bonds to less than 18%. This is significantly reduced than originally 40%. So create stability. China situation with the COVID and the policy of lockdown definitely create a lot of concern regarding their their growth outlook. Although in this past 2 days we heard from Central Bank Governor Yi Gang that they are going to do all necessary to make the growth at least still continue strong enough at the level. That definitely also create a little bit comfort, but the implication is going to be very deep. I mean, in Indonesia, we implemented this lockdown when we have Delta variant, only 2 weeks, and it really erased the growth on the first quarter last year to almost to the negative territory. So I can imagine that if you prolong this kind of lockdown, it will definitely have a huge, especially for a city as big as Shanghai in this case. So within that concern, we are not comparing which one is actually having a bigger impact, but these two very important countries will definitely have a huge impact for many developing and emerging countries. And this is on top of still very difficult recovery for many countries in the world from this pandemic. Although Indonesia output is already surpassing the pre-pandemic level, so we've already 106% above the pre-COVID level. But Indonesia is a few cases. Many is actually struggle, as Kristalina mentioned, they are still under the pre-pandemic level.
Do you have a sense of how much the China lockdowns, especially Shanghai and Shenzhen that we saw, are holding back supply chain even more at this point?
Well, that's definitely, I mean, they are among the biggest port, and for Indonesia, as well as in Asia, I think China demand for many commodities is very, very important. So either this is going to be disrupt the supply chains within China, that is have the repercussion for the rest of the world, or in this case have a direct impact in terms of the demand for commodity and other raw material. So that is really a concern.
Prime Minister Motley, haven't forgotten about you, definitely want to hear from you. I think you win the award for the best growth forecast from the IMF this year, right? 11.2% growth. Tell us what you're experiencing. Obviously, there's a big tourism boom, but you've heard about all these headwinds, and I'm curious how you're affected by it and what you're most focused on.
Yeah, I think that the figures you quoted are what we are hoping for growth for this coming year. But like everywhere else, we are going to have to probably moderate because of the very, very uncertain challenges in the world. And of course, we're not only talking about the war in Ukraine, but we're also talking, as you just referred to the difficulties as a result of the lockdown in China. For us, it is probably the inflation is more of a supply chain problem because excessive demand hasn't really come back as we would like. Our economy fell by about 14% in 2020, as did all other tourism and travel dependent economies in the world in the first year of the pandemic. What we are seeing is literally an increase in inflation. By the end of last year, inflation was regrettably up to almost 6% from just over 3% before. So when that is now compounded by the war in Ukraine and the supply chain problems, again with the lockdown in China, we expect to see continued inflationary pressures. And then when you add to that the tightening of monetary policy, that's going to be worse for us because you have to recall that unlike other countries, the only thing we could really do was literally to increase debt. We don't have the benefit of the fiscal and monetary relaxation that Europe and the UK and the US were able to do so successfully in the middle of the pandemic. We don't have those options. And that is why for us, the whole injustice of the moment probably relates to the fact that the enormous COVID debt that we've accumulated has now also to limit the space that we have to be able to fight inflation, because in small economies such as ourselves, small open economies, as you know, the only way we can cushion inflation is by expanding our fiscal position to be able to buffer people. So these things are truly concerning to us. The issue of the debt is even more so. And let us compare, as I have done for the last 2 years, the GSSA and the Common Debt Framework as against what had been done by the G7 countries. And let us also reflect on the fact that we're not going to be serious unless we bring the non-Paris Club actors to the table. The private sector has to come. And we're not going to be serious until we address the issue of the climate crisis and the funding that's necessary, because at the same time that we're facing all of this, we have less than 12 years to adapt to a very, very, very likability of a 1.5 degree world. But even if it doesn't get there at 1.2, as you all know, we're already seeing the devastating impacts of the storms and the hurricanes. But what most people don't know about are the droughts and the sargassum seaweed and the destruction of the coral reefs that lead to coastal erosion. So at a time when we need to have expenditure more than ever, there is little concessionary funding available, there's little fiscal space available, and there's an urgent need for us to seriously reform the international financial institutions if we are to be equal to the majority of poor people who don't live, by the way, in poor countries. 75% of the poor people of the world live in middle-income countries that are denied access to concessionary funding and that do not have the fiscal space even when they get funding, and that have been compounded by events outside of control in the pandemic and indeed, of course, the climate crisis.
That sounds like a to-do list for the IMF.
So much so. Mia, I have a piece of really good news for you. You have been championing the allocation of concessional finance, not only on income per capita, but also on vulnerability to climate shocks. And today, at the discussions we had, the Resilience and Sustainability Trust, which will provide long-term maturity, finally financing to vulnerable middle countries, got a big boost. We signed up already $40 billion for it. So one instrument that you should take pride of. When Christine was the managing director of the IMF, I remember you saying to us, there has to be allocation of concessional finance linked to vulnerability. It has happened. But let me take two more points of Mia's list, if I may. The first one is the issue of debt. In 2020, debt levels have jumped for an understandable reason, to put a floor under the economy. Largest increase since the Second World War in 1 year. In 21, it was easy because interest rates were low, access to financing abundant. For some, it was cheaper to pay for more debt in 21 because of this drop in interest rates. 22, different. In 22, we have to brace for quite a number of low-income countries, some middle-income countries, to hit the wall. And we have to be honest. That requires upfront action by the countries themselves. Do all you can, extend maturities. If you have currency mismatches, fix it, but also for us, and the IMF has its own responsibility. We have to help countries restructure that early. And if we don't, down the road this year, we may be in a very difficult place. You talked about the 50 basic points. Just imagine what it means for emerging economies if, on top of it, their currency depreciates, which is also possible, and capital starts seeking the comfort of coming here to the United States. Very important problem. And the other one I want to touch very briefly on is climate change. It is not going away. On the contrary, it is getting worse. For shock-prone countries, this requires for them to take measures to make their economies less vulnerable to these shocks, for the rest of the world to provide them with the support that is necessary. Sri Mulyani co-chairs the group of finance ministers that are wrestling with this issue. We have to come up with practical, very effective schemes, because if we don't, it would be, for these countries, for these vulnerable countries, it would be a shock they cannot anymore sustain on their own.
Since we're on the policy discussion, I do want to dive a little bit into monetary policy, since we have the world's two leading central bankers at this table. And maybe I'll ask you, MD, who has a tougher job right now, this guy or President Lagarde?
Whoa. Well, they both are fully equipped to do their jobs, and as a result, it is easy for both of them.
Yeah, I think we can agree with that.
But President Lagarde, so clear, Europe is dealing with sky-high inflation rates as well, highest we've seen in the Eurozone. Why are you not sounding as hawkish as Chair Powell when it comes to raising interest rates and tackling inflation?
Well, first of all,
First of all, smash the like button. We don't have nearly enough likes. Let's get it hyped for today. Come on, guys. And subscribe if you haven't. Jump in the Discord for a live airdrop after the stream. Let's go.
But I think you ask a really important question. and I thank you for that, because it's often the case that commentators, analysts will just put the two of us in the same bag, and I'm very proud to be associated with Jay Powell because I respect him greatly. But our economies are moving at a different pace. Our inflation are fed by different components, and as a result of that, our analysis of the roots and the consequences of inflation have to be different. Let me just give you an example, and I'll just speak for Europe, and then I'll let my colleague, Mr. Powell, speak for his economy. Given that we have both the objective of price stability, which is the driving compass for us. Our inflation numbers are very high, you're right. 7.4% in March, and we will be, more than double above the target at the end of the year. But when you try to understand what comprises that very high number, you see that almost 50% of it is energy prices. So that's a supply shock that we're taking. If I look at my core inflation, so if you take out food, you take out energy, I'm down to 3%. It is north of my target, which is 2%, but it is more manageable, if I may. It's actually 2.9% because it's just been revised this morning. So our inflation is fueled by a supply shock, which calls for a particular type of response, which brings together fiscal policies and monetary policy. And obviously, we cannot operate.
You can trade Netflix and apparently other stocks on Bittrex. I did not know that. That's pretty cool. I'm going to have to talk to Phemex about getting that in.
It's that kind of inflation that we are dealing with. So it is much broader base than it was. It is much higher than our target, but it is supply driven, number one, and it needs to be addressed in a sequential, flexible, gradual way, which is what we have begun doing. We have started the journey back in December. We have reinforced that position in March, and we will have a new set of fresh data in June, which is when we have our next Monetary Policy Governing Council, at which point we will have to determine when we stop net asset purchases in the course of the third quarter, of course, but when in the third quarter? Is it going to be early? Is it going to be later? To be determined by the data that we receive. And that will then lead us to assess whether or not an interest hike is needed, and at what point in time after the net asset purchases have concluded.
So you don't have that in your mind, that you'll be raising interest rates, say, in July?
I have all the steps, all the tools, and all the sequences in my mind all the time. And what I look at all the time too is the various indicators that are provided by the forecasters, by market analysts, by markets, by consumers, by the labor market, which informs us, because clearly the second round inflation is one component that for us is critically important in order to determine whether inflation expectations are well re-anchored at around 2% or whether they are at risk of de-anchoring. So that's what I have on my mind all the time. But
they're moving up a little bit, aren't they?
To be fixated on a day, a time in the day, doesn't make any sense to me, because once we say that we are data dependent, for goodness sake, let's wait until we have the data and then we move on to decide. And we've agreed on a sequence. We have to follow that sequence in the journey that we have embarked upon.
What about inflation in the US? Some are wondering if it's peaked. Do you think so?
So let me say one of the great benefits of the IMF meetings is the chance to talk and collaborate. Christine and me and all of our colleagues talk about these things, and we find a couple of things. First is that inflation is really a global problem. It's quite everywhere, and it's high in most places. But there are differences. There are certainly differences. So in the United States, we have very strong growth, and we have higher inflation. We have higher core inflation than Europe does, for example. We also came into this. Europe has struggled more than we have with low inflation, well below target, had a much lower policy rate. So we have a different level of underlying inflation. So they're just differences. And of course, we all serve domestic mandates. So in the case of the United States, We have had an expectation that inflation would peak around this time and would come down over the course of the rest of the year to an extent, and then come down further in 2023. These expectations have been disappointed in the past, and so now we're really in wanting to see actual progress. It may be that the actual peak was in March, but we don't know that, and so we're not going to count on it. And we're also no longer going to count on help from supply side healing. We're gonna if we get that, that'll be great, and I think that would be enormously helpful in having a soft landing. But we're really going to be raising rates and getting expeditiously to levels that are more neutral, and then that are actually tightening policy, if that turns out to be appropriate once we get there.
But isn't it going to be hard to control inflation through tightening when a lot of it is coming from the fact that Russia and Ukraine are major exporters of so many commodities that we need? We don't know how long this war is going to go on. We don't know how long China is going to be seeing these rolling shutdowns and therefore more supply crunch. Isn't it going to be harder than normal to get a handle on inflation through your policies?
Yeah, we of course can't affect supply side issues. We really can't affect much food and energy prices either in the near term. So it comes down to what we can do is our tools work on demand. But we have a job to do on demand, and I'll go point to the labor market. There are substantially more job openings than there are people who are unemployed. And if you take total employed people plus job openings, that's demand for labor. If you look at the size of the labor force, there are more than 5 million more demand than there is supply. So we've got a demand-supply imbalance in the labor market and elsewhere in the economy. It's clear, and that comes from a number of things, including fiscal policy, including what we did at the height of the crisis. So there is a demand job to do, but you're right, we can't fix supply-side problems.
Do you need the stock market to be lower to
Well,
impact demand?
I never would point to one particular price or asset or class of assets, but generally the way our policy works is we control one overnight rate, plus the balance sheet also has some effects. And that affects broader financial conditions, and that includes asset prices, include credit availability, risk spreads, all kinds of financial conditions. And the financial conditions, in the end, those are what affect the real economy. So we monitor financial conditions. So there really are two steps there. And one of the many, there are many different combinations that are possible of financial conditions, and we have seen some tightening from our rate increases, and that's to be expected.
So some people have this idea, President Lagarde, that you guys need to shock the markets to really to start to see more of an impact when it comes to putting pressure on demand and on inflation. Is that something you ascribe to?
I think what we need to do is communicate with as much clarity as possible as to what we analyze, what we see, what timing we have in mind, and what journey we're embarking on. And for us, it's not so much an issue of tightening when we look at the real rate. It's an issue of normalizing monetary policy and using the tools that we have. I think the added dimension that Europe has is that it's a monetary union with the complexity of a monetary union where you have 19 different fiscal policies, 19 different treasuries, and that makes my job just a little bit more complicated.
But you also have the euro, which, because you're moving at a slower pace, is weakening pretty substantially. Is it getting too weak and making the inflation problem worse?
No, we don't target any particular exchange rate. We pay attention to it. It clearly has an impact on inflation. But we don't target any exchange rate.
Minister Miliani, want to move it to the fiscal side of things. We've done monetary policy. As you look at the appropriate policies right now, it's a little tricky because normally the IMF would advocate for fiscal stimulus in a weakening global economy. Can't do that now when we have such a strong inflationary environment. So how are you thinking of the sort of policies to insulate your economy from some of these issues?
Well, first, we are not starting from the situation which is favorable after 2 years of the pandemic, which is widening the deficit and debt for all countries in the world. That's one thing. Second, with the interest rate inflation and the interest rate response, the cost of borrowing definitely is going to be high. So if you are going to continue boosting, this is the supply demand side in this case. If you look at the recovery in Indonesia case, demand has been now growing very fast. Consumption recover with the mobility because of the pandemic under control, investment recover, export is double-digit growth. So we don't have the recovery from the demand side. If it is going to be a problem, whether this can create overheating, but our inflation is now around 2%. So it's much low in this case. The problem on the supply side is much more complicated, as Chairman Powell mentioned. If it is related to the energy and food, it's politically, socially very sensitive. You cannot delay on that side. And that's why usually that immediately creates a fiscal pressure in the form of, are you going to allow this shock coming from outside pass through directly to the people, or you are going to absorb this shock through your fiscal policy by providing subsidy, and then your deficit will be widened. That deficit is going to be too costly because the interest rate now is much higher. So this is really not a free lunch or free policy. You really have to be very careful in designing all aspects of the fiscal side. I think from the Minister of Finance point of view, you should not, just like Christine mentioned, you should not narrow your instrument. You have a lot of options. In the fiscal side, you have on revenue side, so on tax, non-tax revenue, excise, you really have to look at the composition of your revenue, which one is actually strong enough to then you can collect more. And that's why in Indonesia, even during pandemic, we reformed the taxation. We passed through legislation, we harmonizing the whole legislation related to the tax, including anticipating to this global taxation agreement in which we are going to have at least a better arrangement on the taxation across country. The second one, you look at the spending side, and this is exactly our spending in the past 2 years dominated mainly by the COVID-related spending, health, vaccine, treatment, therapeutic. So now when the declining rate of the COVID, meaning that you have a fiscal space, you don't want to squeeze so that the economy is going to weak again. So the same space, but you free up from this health, you can use it for others. For example, infrastructure again, labor-intensive infrastructure so that you can create jobs, because many of them is actually unemployed or reduce their income during the pandemic, that can be done. So expenditure side definitely have a room for that, for you to really do in a much more detailed way. What that can create job better, what that can shield this shock, for example, like food security, energy security, infrastructure that can improve your productivity. So that is very important. Then you are dealing with the financing strategy. With this higher borrowing costs, you have to be very careful. So fiscal consolidation is definitely very important. In Indonesia, we're reducing our deficit from 6.1% to 4.5%. We are aiming for 4% and then below 3%. That is the fiscal discipline of the Indonesia fiscal policy in the past 20 years. So we only have 3 years during this pandemic to allow to have the fiscal deficit above 3%. That's signaling to the market that we are on our track, credible enough, so that the market is going to price our bond correctly in this case. So they are not creating excessive punishment only because Chairman Powell said that I'm going to do the 50 basis point how many times. That is going to be something that...
What did he say on that?
No. Because you're asking the question.
Yeah, no. Basically said it. Prime Minister Motley, you brought up food insecurity in your very powerful, I went back last night and watched it again, inspiring speech at the UN last fall, I believe. That was before any of this got so extreme because of the war in Russia. So I'm curious how you're thinking about it now and what sort of solutions we can look at.
Well, the truth is that all of us have had to go into a situation where we've put measures in place to boost food security, food and nutritional security. In the Caribbean community, we've set a target which was...
Thanks for joining us, everybody. We're going to be finishing out this. I think they still have like half an hour, so don't go anywhere. relax. If you got to do something, leave the tab open and idle. But do me a favor, please smash that like button. Every time someone hits the like button on this live stream, YouTube shows this stream to new people. It puts it into discovery. Subscribe if you haven't subscribed. We're live here all the time with the cutting edge of crypto and TA. I love you guys. We'll get into some spoken TA once they're done.
Countries have as small island developing states, not because of profligacy, not because of corruption, but largely because of having to take on our balance sheets the consequences of the actions of others. We feel that the time has now come for us to make some decisions to change it. And Kristalina, you're absolutely correct about the Resilience and Sustainability Trust, and we thank you for it. And in fact, it's a right step in the right direction. It's the only step thus far that
Tron,
acknowledges
baby.
vulnerability, but we need the World Bank and the development banks to go further with us. And the reality, one of the things you said to us at the beginning of the pandemic was that you needed us to keep to spend the money but keep the receipts. And we did in fact keep the receipts. So it should be easy to identify COVID specific debt. It should even be easy to identify climate related debt. But what we need to do, because of our highly indebted situation already, is to put this on another international balance sheet. You can perhaps have a pandemic trust and you can have a climate adaptation trust. But the reality is that what we need is to be able to move it off of our balance sheet, because if it is on our balance sheet, then it precludes us from being able to achieve the SDGs, which is our normal development trajectory. And we really want you to perhaps treat it like the British war debt, if it has to come on our balance sheet. Because if it's coming on our balance sheet, how do you have a situation where the British understood after World War I, they issued bonds in 1914 and 1917 as 30-year debt at 5%, consolidated them in 1932 to 3.5% with no maturity, and it became perpetual debt that they paid off 100 years after the 1914 debt. Now we have to think outside of the box, because it's becoming increasingly difficult even for us to shield our populations with the limited fiscal space that we have against the fact that the cost of debt is likely to increase because of the monetary conditions tightening, and because of the fact that we just simply are not seeing the rate of economic recovery as quickly as we need to. Now, we're confident that tourism recovery usually can come back and bounce back quicker than most, but what is happening with the increased fuel costs will affect the cost of flights, will affect also how people view where they want to go. And you have to ask yourself, and Christine, you're perhaps better in a position to say this, is there still a strong appetite for travel in Europe, given what is happening with the war in Ukraine? And I just hope that we can take the bold and brave decisions necessary, because too many people's lives are at stake. And quite frankly, it cannot be a unidimensional conversation either about what is happening in Ukraine alone. We are totally sympathetic. But what's happening to the people in Tigray? What's happening to the people in Yemen? What's happening to the people elsewhere that are also on the verge of a humanitarian crisis, if not in the midst of that crisis already?
There's a lot there. A few questions? I think you can.
I think Mia is totally right, and I think that we should acknowledge that all wars are horrible, are human tragedy, are causing devastation and economic harm. All wars, and this one is no different, and it is self-inflicted by Russia in a determined and totally unjustifiable way. But all wars are to be stopped. You're completely right. And consequences of war, when you look at Afghanistan, for instance, that's another place where clearly the consequences of wars and years of wars are hurting people and hurting women more than anything else, actually.
MD, did you want to respond on the debt question?
When the IMF was created, the main objective was to help countries correct domestic policies that are undermining their opportunities to grow and create employment. Today, what Mia is saying is we live in a world in which there are exogenous shocks that are harming countries and are putting them in a position in which on their own they simply cannot handle it. And the question in front of us is, how do we recognize that it is not bad governance, it is not bad policies, it is a climate shock, a pandemic, a war that is dramatically impacting a country, and what is the role of international institutions to be a corrective force in that regard. During our meetings this time, this issue of what is the role of the IMF in a world of multiple shocks, some of which are because of the evil of man, some of which are because of Mother Nature, but they are devastating countries to a point in which they simply cannot pull themselves out. This is one issue, and Mia is right, we have to work on identifying instruments. We are looking into are debt for climate swaps a possibility? We haven't advanced it enough. It is still in the universe of retail. In other words, I would do it for you, for your project. We want to move it to performance indicators and the world of wholesale. In other words, we do programs with a country like Barbados. The second issue, though, is that not all problems are exogenous. We still have plenty of problems that come because of poor judgment, bad governance, corruption. When Christine was the managing director here in 2018, early 2019, in these good days that we almost forgot existed, she would say, when the sun is shining, fix the roof. Mm-hmm. What we are now discovering is that many countries did not fix the roof when the sun is shining. Now it is pouring. Well, maybe now we get to fixing the roof. I would strongly argue that there are many countries where structural reforms, reforms related to transparency, improvements in governance, can significantly improve image, attractiveness for private investments and performance. Indonesia has done systematic reforms that took Indonesia now to be in the small universe of countries, emerging market countries, that have caught up with their pre-pandemic level. And I think for us, we should not shy away from the issue of good policies mean better lives of people.
You mentioned the role of the IMF. You know, there is this bigger question right now about the role of globalization in general and the onshoring of manufacturing and supply chain. And it started with COVID, or maybe even before that, and really got exacerbated by this war in Ukraine. And obviously, Chair Powell, there are going to be ramifications of this for growth and for inflation if we are, in fact, in a world where globalization is going in reverse or even dying. What do you think?
Well, that is certainly a possible outcome here. I think you've seen questions about globalization, and this series of events around Ukraine certainly has the possibility of leading to a more fragmented political situation and economic situation. You saw Secretary Yellen's speech this week about looking to, I think she called it friendshoring. So I think there's a lot of thinking going on like that. You know, the globalization that we had benefits to it, and it had cost involved in it. And you know, these are really questions more for elected governments, I would say, than they are for a central bank. But there would certainly be a different world. It might be a world of perhaps higher inflation, perhaps lower productivity, but more resilient, more robust supply chains. If we were to have, I mean, the supply chains that we had were very efficient, but quite fragile, it turned out. So. And I think it's not clear that we're seeing a reversal of globalization. It is clear, I think, that it's certainly slowed down, and it may go into reverse. I don't know.
Is that? I mean, clearly Europe's thinking about it in terms of security and things like energy and dependence on that sort of thing. Do you think we're going in reverse?
No, I think we're going to revisit the terms of trade and who we are trading with, and on what principles we are determined to continue trading. And reorganizing supply chains. And, you know, for once, I'm quite happy to actually plead for the case of Europe, because there's always Europe bashing now and again. And I think that the work that we had to do over the last 70 years and the adjustment that we had to make, moving from a small group of 6 to now 27 countries, which are all members of this, single market where goods, capital, and people move freely, has been a laboratory of a different kind of trade. And it is not easy, let's face it. There are countries sometimes that are drifting, that would like to operate slightly differently, but where the governance, the rule of law, the principles by which we abide when we join the club, keep us together and keep up on track with those key principles that we respect. So it is a bit of a laboratory, and I would hope that as we re-examine and revisit globalization, which has provided a lot of good in and of itself, we can use that experience to see how we can enforce, how we can govern, how we can make sure that everybody is included, that we don't leave some by the side of the road, but we try to be together and make sure that it is inclusive.
I know it's something you're thinking about a lot. I mean,
yes,
maybe it's a taboo topic to talk about in an IMF World Bank meeting, but this idea of the fragmentation, what's happening geopolitically and the alliances that are forming and how that's going to drive the underlying free movement of trade and people and capital.
We are living in a multipolar world, and that has already led to some frictions and some shifts in trading partners. But I am in the both of those who say we are so integrated, and if you make a list of the problems that no one country can resolve on its own, it's a very long list. We have to find ways to work together. So what is the question? Are we going to evolve in blocks that are closed and function independently from each other? Or we would have some preferences, preferred trading partners, but we will have highways and bridges that allow us to still solve big problems, come on the same page. What was so interesting today in our discussions was how strong the voice of we have to work together was in the room. And it was especially emerging markets and developing economies that said, hey, we have achieved so much because of this integrated global economy. It is irresponsible to make the world poorer. And actually, Sri Mulyani spoke so well that it is the quality of our world, not just the quality of our economies, that is at stake. But it is more difficult, and it makes my job even more important in finding place for all of us to agree. You probably have heard the story of communiques not materializing. Didn't materialize for us at the IMFC, but if everybody agreed on the substance of the policy conclusions and recommendations, everybody. And then we had one member that said, well, but you're saying something else there that I don't agree with. It is very, very early, in my view, to go and buy a coffin for globalization. Not that yet.
That's quite a statement. Minister Mulyani, curious about your take and whether you find yourself in sort of an awkward position because of the close trade ties with China and proximity there, and then obviously the relationship with the US, and also as the chair of G20 in the developing nations there, how you sort of weave all of this together.
Well, all emerging country, developing country, or from developing country to become emerging country, they usually can achieve those level of progress because they were open. They are also integrated with the global economy. Yeah. So when Christine was in the IMF, I think telling about the globalization has reduced a lot of poverty, and that's why what we are aiming, or the focus for many countries, is how you are going to prepare the foundation of your economy, whether this is on a policy level, institutional level, as well as the practice of the business that need to be competitive so that you are going to be able to have this efficiency, productivity, and then improvement on the livelihood of the people. Now it's changed. The language is no longer about efficiency, but all on security, talking about reliability. So even I think we just heard from Chairman Powell that if that is at the cost of efficiency, be it maybe. Now, that's really maybe creating a huge impact for many developing country, emerging country, who they, in this case, enjoying this improvement as well as the progress in their economy and prosperity through globalization, through trade and investment. And this is no longer become the instrument. Now for Indonesia, because we are big enough country, the biggest in the ASEAN economy, and of course, in terms of the trade partner, investment partner, United States, European, Japan, and China, they are all the biggest partner for Indonesia, of course. Within the ASEAN, we have, for example, with Singapore. So the choices is there. And we enjoy this because we know that the world following and implementing the global rule, even though it's not perfect. If you talk about WTO, there is here and there, but we know that there is a rule as a baseline in which we will play based on that. And that's exactly what holding all of us, the world together.
Yeah.
Now, if a country can violating international rule, or in this case that we no longer trust this rule can secure or providing safety and security and certainty, then the world is actually resetting. It's totally different. And this is historical in a way, because the world enjoying huge progress in terms of prosperity. If you look at declining of the poverty rate, improvement in the human capital index, infrastructure development, they are all because we rely on this goodwill, trust, and building this rule for all countries in which then we can rely. I'm not saying it was proper. It is not.
No, it is not.
That is
Yes.
always like,
Yep.
but it served well, or at least it served all the member countries in this world to actually rely on those kind of mechanism. Now, I think it's shaky. And that is exactly maybe what is the highest risk for any country to design their own policy. What does it mean for Indonesia? Should we like self-sufficient in this case? For Indonesia, it could be, because we are big, we have a lot of land, we have fertile land. So we do have like the food security, energy security, we have coal, we have oil, we have gas. But not all countries have this kind of luxury like us. And so should we not care about others? That is not really, I think, the right, morally not right, as well as from the interests of the global economy, it is not also right.
We're tight on time. We have 1 minute left, but I do want to hear really quickly from everyone, including you, Prime Minister Motley. I sometimes get the best answers as a journalist when I ask people what we're not paying attention to, what the media or the world is not focused on. So I'll ask you just very quickly, either an upside risk or a downside risk as it relates to the global economy, what we're not paying close enough attention to, and what you would flag. And Prime Minister Motley, put you on the spot and go to you first.
I'm saying that there's an absence of global coordinated political leadership. The G20 is not representative enough, and we don't have the political will. The problem is not with the people who you have in the studio for the most part. It's not the heads of the institutions. It's the absence of countries to act in a coordinated way that will relieve the pressure. We saw it in the pandemic. We're seeing it with too many other issues, and hopefully we can get the sense of urgency of the moment impressed on all of us globally, such that we can avert the worst.
Minister Malyani, what about you?
Well, I think as holding this presidency of G20, what is remarkable given this tension, all countries that we consulted, because G20 is based on the consensus, all countries that we consulted, they believe and they also want that the cooperation and collaboration and coordination, what Prime Minister Maya mentioned, is actually the one that they want this to be preserved, regardless differences. So amazingly, what we are thinking it's supposed to be safe and preserved, and what the reality that we are now facing is actually quite a big gap. So our responsibility holding this presidency is try to continue making this goodwill of collaboration and cooperation. Try to save a piece of the world's most important asset, that is coordination and collaboration.
Will Putin be at G20 in Bali this year?
Well, we invited, because inviting the head of state cannot be like, oh, tomorrow we are going to have a G20 and then they just send. We invited like back then, and it's already now all the country in the G20 received the invitation. In terms of the arrangement of the meeting itself, just like what we have yesterday, it was not easy, but at the end they are all in the same room. But if you don't agree and you want to express this politically, like Christine, he walked out. So that's another expression of the politics. But it doesn't prevent us to talk about the substance, which is important, not only serving the G20, but also for the rest of the world. So it should be manageable and doable.
Chair Powell, what are we not paying enough attention to?
So I'll tell you what I'm thinking about, which is, we had this economy that was, very low inflation, very low unemployment everywhere in the world before the pandemic. Then the pandemic comes in and really knocks everything sideways. Then we have this remarkable, particularly in the United States, response, incredibly fast recovery, faster than anyone hoped. And then we have inflation. And so that's a lot right there. And then we have a war. And now we're realizing that COVID is still really with us. So what I'm thinking about is a couple things. One is, how is this, are we going back? Probably not, to the old economy. What's the new one going to look like? The other thing, maybe more pertinent to your question, is in the middle of this is a labor market in the United States where people can get paid well. It's too hot. It's unsustainably hot, but notwithstanding that, it's a very, very good labor market for workers. And it's our job to get it into a better place where supply and demand are closer together. But I'd say that's how I'd respond.
In the upside category, risk, you're saying
wages
are good, people can get jobs.
I think there's a lot to like about the U.S. labor market, but I'd be the first to say, though, that it's not sustainably hot. But I do think with our tools, we can get supply and demand better aligned.
President Lagarde, what about you?
Martin
what should we be paying more attention to?
Welcome.
I think of two things. One is what I would call the green swan. We talk about black swans, and I agree with Jay that we've had one thing after the other hitting us, and in the main we've tried to respond as well as we could, and often in a very coordinated fashion, thanks to international institutions like the IMF. But the green swan is something that terrifies me. When I think of what's happening in South Africa at the moment, the hundreds of people that are dying because of flood, and what's going to come next? Could it be Mother Nature that we are hurting so much that it retaliates against us? So that's one thing that is often on my mind. I think the next one is the madness of man, more than women actually.
Always. Yeah. Madam MD.
I think we are not paying sufficient attention to the law of unintended consequences. We take decisions with an objective in mind and rarely think through what may happen that is not our objective. And then we wrestle with the impact of it. Take any decision that is a massive decision, like the decision that we need to spend to support the economy. At that time, we did recognize that may lead to too much money in circulation, too few goods, but didn't really quite think through the consequence in a way that upfront would have informed better what we do. And I subscribe entirely to what Christine said about climate shocks. We are already out of time. And the fact that whenever something hits us, we forget about this other crisis is incredibly troubling. The fact that we are, I'm sorry I'm going on here, but I'll finish in a second. We act sometimes like 8 years old playing soccer. Here is the ball, we are all at the ball, and we don't cover the rest of the field. Our ability to deal with more than one crisis at one time is very, very limited. And we have to zero in on the really big things that would determine the future and keep our attention on them. When the war started, my daughter calls me a week later and says, "Mom, what happened with the pandemic? It disappeared from media, we didn't pay any attention, it is still with us." So we have unintended consequences of actions, and we have insufficient attention to cover the whole field.
Well, we've covered a lot today in this discussion, so thank you all so much for your time and your candor and taking my questions. And thanks to everybody who tuned in as well. Have a great afternoon. Thanks for being with us.
Oh, thank you very much. Oh, that was something. That was something, I'm not gonna lie, I couldn't even pay attention. It was pretty, it's just like, what did they even say? They never say anything. JASMY looks like crap, bruh. I mean, it's getting better. It's getting better. But wow, that overshot the retracement hard. Hard. No bullish div on the day. We had the perfect TP, what can I say? We looked at TP at 31.5 cents, it was perfect. Fighting with that 2050. If it can get above here, get above 26 cents, it's at 25. It's not a big deal, not a big jump. It could be alright. Could be looking alright. But at the moment, man, ugh. Boy, I don't like it. Not a fan. The 20 weekly though, sitting at 7 cents. That's got to be attractive to the market. We might be looking for 7. It's probably right around the retrace we'd be looking for too. Close, not exactly, but close. Don't love it. If I was in JASMY and I could get out at 7 cents, that's what I would do. Bitcoin, unfortunately, did not bounce at our local daily support yet. We're looking for some bullish divergence to paint, but it looks like the 2-hour bear div still in control at the moment. I do like this. I do like this. What we see here is a very consistent selling. Why do I like this? Well, because it's not creating heavy resistance. We're not seeing rallies get sold off. We're not seeing this. That would be worse. Then we'd have to contest with these areas on the way back up, but we don't have it. This is a very smooth sell-off. Smooth sell-offs tend to bounce. They tend to bounce with very little resistance. I'm still of the same mind as I was in the beginning. I know I wasn't narrating, but the 20 weekly moving average and will be very close. I guess we have to modify this because it moved. Very close to our 0.618, our golden retrace. I'm still looking for this move. What happens here, I do not know. Could easily get rejected. We could see a momentum leg paint. It would look something like this. And we'd be looking for further downside. But at the moment, this kind of sell-off is honestly the best thing. This is the best selling that I could imagine for this area. We are slowly inching up. So, what we want to do is stop the bleeding wherever that happens. Hopefully near here. We are deep in our retracement though. We're past the 618. So that of course puts the full retracement on the table. That's what we don't want to see. We do not wish to see trading below 40,900, or else you get into the extensions. And our extensions, I don't like where they line up. They're very clean. Our 1618 sitting at weekly support 39.7. Our 2 very close to that monthly support down here at 38.5. That would not be ideal. I turn this off. But shout out to our sponsors again. Thank you, Market Cipher and Phemex. You guys rock. Ooh, I got 1 million tabs running. What the heck? You can find the links to their wonderful sites in the video description below and in the chat. Market Cipher really firing off these green dots here, but I don't like this. We saw ugly earlier, and ugly followed. That money flow is pretty gross. That's a like 45-degree angle down. Luckily, these momentum waves are getting a little calmer. You see those lows coming up here, but with that money flow in this condition, that's doesn't really matter. Money flow is going to be in control. 15-minute here, a little bit nicer. We see money flow is threatening to roll over, but so is momentum, and that may save it. May get a near miss there on money flow. That's what we would be looking for. As always, nothing on this channel is financial advice. Go ahead and read the disclaimer at the bottom of the video. We are just looking at charts, sharing ideas, opinions. Let's see. Please smash that like button. We have 340 likes. Can we get to 420 likes? Can we get our 420 license for the day? I'd appreciate it. Every like and subscribe while we're live. Every time we get a like or subscribe while we're live, YouTube then shows the stream to more people. It puts it into discovery. So I really appreciate everybody who does that every day. It helps our channel grow, and it helps other people find our quality content. So appreciate it. 30-minute now in selling money flow. First time since April 18th. So 3 days. That wasn't really... That was back here. Back here. We saw a little dip last time. Yeah, I'm not hating this. This definitely overshot where I thought it was going to bounce, but it's not looking the worst. It's not looking the worst. We do have 41 minutes left in the hourly. Hourly still looking strong on Market Cipher, though. We do have 2-hour bearish divergence on our RSI highs and our MACD highs. I didn't catch that earlier. Same bearish divergence on our oscillators. And we're seeing that play out here as we're having a little selling period. I'd like to see this bounce here. Today's target for our close is pretty easy. We're looking for any close above 41.5. That is our local daily support created by the last 2 days. We have a new order block right here. Order blocks are great opportunities for trades. If we get the daily close today, we have the 3-candle long setup, which would be pretty fancy. Pretty fancy for where we are. We have a higher high on the daily. Momentum on the day finally rolled over. This is where it gets dangerous, though. These single lone candles can be savage. What's up, The Fan? What's up, man? Thank you for subscribing. I appreciate you. Good to have you here. And same with Syrian family. Thank you, guys. You are the best. You're the best. Welcome to the family. Jump in our Discord to keep up with our live streams. We're live here like every day, every other day. And you get to take part in the airdrops that we do after the live streams. All you have to do is be in there and click the verify little green checkmark emoji on the first message you see when you join. Very easy. Cool. 15-minute showing a little bit of upside. Are we gonna bounce here? I don't see it yet. Candles look like we are. We have bullish divergence in our low time frames on RSI and MACD. And we can see that with lower lows, or higher lows, sorry. Higher lows on RSI and MACD. However, we have bullish divergence because we don't have a lower low in price. Is that right? Higher lows on RSI and MACD and lower lows in price. That's a strong bullish divergence, but that's on the 5 minutes. So it's probably nothing to get excited about yet. Double GRT, double GRT tip. We had GRT open. Our GRT, this is what I was diddling around with while they were talking. I do like GRT. I like the chart right now. We placed this trade earlier in April. And again, not financial advice. This is purely for educational learning, analysis reasons. But we were looking exactly to take that long position at 36 cents from the accumulation area. Looking to stop below our lows here in March. I like what we're seeing. I like what's going on with this chart here. We have 1, 2, 3 swing lows potentially. That's a 1, 2, 3 bottom as we have a low, a lower low, and a higher low. If we invert the scale, we get a pretty picture here. Potentially a left shoulder forming on 1, a head forming on 2, and what could be the right shoulder on 3 here. So what would we be looking for? We would be looking for a break of the neckline. That's about 5 cents, 5.2 cents. On a break of that neckline, we would look for a back test of the neckline. That would be the classic entry to a head and shoulders pattern. And that would be right here. And we're looking here, at least in this example trade, looking to take profit around the 6.2 cent area for a 70% gain off of our entry. There is potential for higher. If we see this beautiful inverse head and shoulders pattern actually play out, we may be looking as high as 7.8 cents. And depending on what the rest of the market does, we could see this put on more gains. So I'm digging it. I don't own, actually I think I own $3 of GRT from Coinbase Earns program. I've never invested in it for transparency. I did not take this trade, but this trade's looking pretty dang good. Our entry was clearly an accumulation, at least locally accumulation zone. We see that here. And so now we're just looking for that corresponding upside. I think GRT has a good swing at this trade closing in profit. See what happens. All right, getting a little follow through here on the chart. Not a ton. We are still very much in this low time frame downtrend. Oh, yeah. Still very much in this low time frame downtrend, but that could change. Could change quickly. Let's get rid of this frowny face. There we go. It could change. Just need to see that 5-minute get a little healthier. It's just not healthy yet. I think this does look like it wants to move at least to 42. Pray there's no rejection there off of that 200 on the 5-minute. Little knifey on the corn here. We have our long still open. If I can find it. There we go. Our long is still open. I was trying to tell you guys while they were talking through being, mime language, sign language. We had a few fills since the last stream here. We set this trade out with all of the entry and take profit levels. I think 2 streams ago. We followed up with it last stream, so let's follow up with it this stream. We entered, I think, originally at 40,100. We looked to add at 48.5. In between the first stream and the second stream, that filled when we sold off to that monthly support. We added to our long, and we took profit. We took profit at the exact TPs we set out: 40,944, 41, 144, 41.9. Then I did a little freestyling, actually. We did 42.14 as well, and that hit. I did a little freestyling in between the last stream and this one. Really was just kind of like a scalping play, very small size. Opened or added a little bit at 40,001. Where was that? I think that was... Where was that? It was right here. Did a little bit of an add here. I watched price move farther down, and when I saw it went below my entry, I picked out a very modest TP, and we exited. So we added and exited to that trade in the meantime, and now we're net back to where we were, to where we was. Trade's going pretty good, pretty good. I think we have, what? Currently in $83 unrealized profit, so steaks for dinner. We've realized almost $60 on this trade. That's just a classic safe, not safe, but a classic conservative easy win, easy peasy. So thanks to Phemex out there for being dope and being our sponsors. That's why using their platform. Let's see, Ape was amazing. The Adam and Eve, if you guys watched that video, the Adam being this V shape and the Eve being this smoother bowl has played out here as we've broken 1557. The Adam and Eve double bottom pattern complete. We didn't see that complete $18 target hit. Came just shy at 1750, and that has pulled back a little bit. I would be I think this is a strong looking chart. I think if this pulls back more, we're likely to see maybe that 13.19 area where we originally looked to lock in profit, possibly down as far as $13 for the 618 retrace. But I'm still thinking you get a full $18 touch here. We could see our 1618 or measured move targets at $19.81 and $23 hit as well. I think these are definitely logical places to look to take profit if 1750 is broken here. So I'm going to put an alert. I think Ape's looking pretty darn good. TRX caught my interest during that live stream. I haven't looked at it in forever. But TRX, man, what a crazy freaking candle. What a crazy candle. If we look at our moving averages, we have a very powerful moving average set up here with the 50, the 100, and the 20 all in the same spot relatively, and today's candle blasting through those. We see those do tend to lead to some interesting price actions. We have a bullish kissing on the weekly, which is definitely building confidence for me. I put these kind of theoretical trades here just I guess as like a hedge, but I was just doing some freestyling. I think the play here would be probably a short, unfortunately, because we've rallied up to weekly resistance, a stop above that 50 weekly moving average, and a close at the 200s. Now, this isn't guaranteed to happen, of course, but whenever we see these big moving averages, I like to say spawn, you can see right here was the 200 week of trading. Price does tend to be attracted to them. It does not guarantee that it gets touched, but they become high probability targets. So if this plays out and that short stays open, this could very easily be a very profitable play. Honestly, with the strength on the daily here, I'm really probably more likely looking for this swing high to break and maybe a test of that 10-cent psychological resistance, which is why any short, we're looking to stop above our local high here. What is that, like 8 cents? I don't know. It hasn't broken out. We're still in this same pattern. We have a high and a lower high, so we may just see these lows come up. May play like that. This is definitely an interesting bottoming pattern, though, so I'm going to have my eyes on TRX. I have no alert set because I'm a chump. Now I have an alert set. Let's see, what else do we look at? Monero is looking insane. Monero has looked insane. Look, this is the weekly. You have a bullish kissing on the weekly here. Wonderful. You have 1, 2, 3, 4, 5, 6, 7, 8 weeks. 8 weeks of green candles. I bet you haven't felt 8 weeks of green candles in the overall crypto market, but Monero has been quietly grinding back up. I think it's looking to test 315 if it can break that new all-time highs. It's a very spicy chart in my opinion. Looked at Netflix. Netflix looks like complete death. This is the wildest stock chart I've probably ever looked at. Trading up to $700, now at $215. This is wild. We have a gap at 106. That might be a place we could look for a bounce on Netflix. But I think the stronger argument is Netflix is a total shitcoin, and you really don't have meaningful support until you're all the way back at your 2012 or 2011 highs. And you can see over here the swing low and the bounce creating a pocket of support. And what drives this home for me even more is if you take our local swing low to swing high, our 2618 is sitting right there. And if you take our major swing low to swing high, this is the 618 retrace. So there's a lot of technicals pointing to this $43 area on Netflix, which seems insane, and maybe it is, because this is a 92%, that's right, a 92% loss from Netflix's all-time high. From $708 to $43 is a wild crypto-esque sell-off. Maybe this is too doomsy, I don't know, but this is what the chart is looking at. I mean, it's either that or maybe you get a bounce at that gap. Maybe you end up painting something like this, and then you have a channel maybe established in a greater picture. But dudes, this is knife catching. Netflix looks worse than the SES to S coin. It's wild. I saw something on the dollar here that I didn't really want to see, but when in Rome, we definitely have a potential bullish dragon pattern. We can see that here with the head, the hump, the break, and the back test of the hump. We would be looking for some kind of measured move to the upside. Typically, you look at least to the high. I don't want to see it, but you don't get to choose what's on the charts here. The dollar is still burning gas. The monthly is still slanting up, still gaining momentum. Same with the weekly. There's no significant bearish divergence to be found yet here either. Money flow is rocketing up on the dollar on the weekly with a higher momentum high. You really don't find anything even remotely showing it's out of or slowing down until you get down to the daily, where you do see bearish divergence on your highs. But man, market Cipher, I mean, it's showing a little bit of weakness, a little bit of chilling here with a lower high. But dudes, look at this momentum, man. This is straight up bullish power. So for now, man, everything has that pressure of a strengthening dollar. That is some sell side pressure. ZIL also making moves. ZIL making some moves as well. On the weekly, we see a lot of convergence around 8.2 cents. This may be, not financial advice, but this may be a place for a intelligent trader to take a position. That is very possible. You can play it like that. Why is that such a big risk to reward? What? Oh, because it's a 250% gain. Wild. You could play it like that from the moving averages. You could look to play it from the 200. This is definitely not out of the cards. That's definitely possible. You'll get the 1, 2, 3 and set up for an inverse head and shoulders. That would also create on a bigger picture a cup and handle pattern, and we would be looking for further upside, man. You definitely see around up here at these crazy measured moves. If the market gets hot again, they get right back on the table. But I think this is the play. ZIL looking good. It may take a few more weeks to play out though. JASMY, I don't think looks good. All right. Are we gaining? Money flow chilling, momentum rolling over. This is what we were waiting for on the 5. It looked like crap a few candles ago. Now it's looking pretty decent. Well, no, not pretty decent. In better condition than it was. I like this wick off the daily support. I like that. To me, suggests it's looking to test this descending trend we have here locally. But what happens there, I do not know. I'm still looking for the same thing we were looking for here. Move back to that 618 to the 20 weekly moving average. But we're going to have to wait. Going to have to see what the corn has in store for us. Okay. HBTC. This is interesting. Let's take a look at this. I don't know if this is a chart error. Maybe a data error, but Houbi. HBTC. Why can't I find it anywhere? That's odd. I guess HBTC like doesn't exist except for on swaps. Okay. That's strange. Let's see where CoinGecko. So CoinGecko is saying that HBTC just jumped from Bitcoin price, aka like 41K, jumped up to 83,000. Trading volume 2 million. That's pretty low for something like that. Social markets. That's interesting. It has it on. It looks like only on Hotbit. I don't know if I really trust Hotbit. Somebody maybe just fat-fingered. Wow. Yep, and it's back down. Wow. Wow, someone just bought HBTC for what, like 300 to 1? Not a ton of volume, but enough volume that someone got boned. Let's look at this trade history. No, we're not gonna get it. That's you don't see that every day. Someone got savagely boned here. You can see that settled back down, but it's still trading 2 to 1, which is pretty wild. This site sucks. This chart sucks. Come on. Oh well, I'm gonna just move on because this chart sucks. Briefly leveled back off, still at 2 to 1. That is weird AF. Let's see if any of the other exchanges are following suit, and they are not. I don't trust Hotbit. Hotbit, goodbye, Hotbit. You're weird. You seem scammy. TRX Theta. We looked at Theta exactly as predicted. We did this chart so long ago. So very long ago. We saw the lows or the highs coming down. We saw the flat bottom, and we said this thing's going to look to dump to the next support level, down at $2.13. It didn't quite touch, but it came, I would say, within a margin of error. We have a double top here at $4.32, and now we have a higher low, and we're retesting $3.50. I think if Theta can break $3.50, it's going to look to retrace some of these gains, and that's likely going to place it back in the $7.50 area. It's not out of the woods yet, but it's so far exactly as predicted. Good luck, Theta. I still hold some of that. Wompity womp. That's so weird. Look at this. What happened? What happened here on HBT, on Houbi or Hotbit? That is so strange. Somebody got screwed. Maybe a bot went crazy. Not a lot of big gainers, actually. We haven't looked at Zek in a while. Maybe we'll pull Zek up. Please smash that like and subscribe button, fam. Help us. Oh, that was an awesome call on Zek. I tweeted about this at $1.07. It did trade up to 216. Now it's creeping back up here. You do have a neckline though, so you got to be careful. For about $1.80. I think $1.80 at the 618 here. 618 retrace. What happens there, I don't know. But it's looking pretty probable. Here's, you know, I am a fan of Zek, and I have been bullish on Zek. But there's something I don't love. I don't love on this daily, this double test of $135. Here's why. If you reject, all of a sudden you have a very bearish pattern, a very awful looking head and shoulders. We're not there yet, so what happens up here is going to be important to this pattern playing out. But a break of 135 and all of a sudden ZEC is not looking so good. Is what it is. I think 180 is pretty probable though. But all your moving averages are right here. Ooh, this makes me think it's less likely that it actually will trade below 135. Those moving averages are right where they need to be. And you're back above the 20 and 50, huh? I think actually, boom, 160. Yup. You have your weekly bullish engulfing, your 20 daily, your 50 daily at 166. A close on ZEC above 166 makes 180 very probable. And to be honest, I think that can put some fire under the bulls for a retest of March's high. And at that point, you're probably looking to break it. Dang. You got your 1618 on a break of 216. Right around that all-time high. Is it the all-time high? No, your 20... Q4 2021 high. Huh. Not as exciting as I thought it would be, actually. There we go. You break that high, and you're definitely geared for that $300 test. I like the moving averages here. I like the weekly close, so we're gonna wait and see. Do the ZEC bulls have what it takes? I hope so, because I have a bunch of them. T-Fuel, basic attention token, still like at the exact same price it was forever ago. Let's look at GMT quick. We've gotten a lot of charts in today, I'm not gonna lie. HBTC is a rug, I believe that. I wouldn't touch HBTC with your money. GMT didn't quite reach our $4.11 target. Where did it stop short? $3.85. It might not be done. We'll see. Reaching back to that 0.5 retrace. I think that... Nah. Do have a nice little support at 265. Nothing really stands out to me here. I just think this is a risky play. You got the blast. You got a little rounded top here. It's actually not the worst to see. Wow, RSI though. RSI just being walked down the line, but price not responding. Maybe this has a little bit more fuel left. I would be looking for a 0.5 to 618 retrace down here. Maybe off that 200 hourly. And maybe you see something like this. That wouldn't be bad. I could see that playing out. Something like that. As this comes up. I'm hands off GMT. I don't like buying stuff anywhere near the all-time high. It's not my jam. All right. Let's see if HBTC reset. Nope. It's only on Hotbit, and Hotbit is not an exchange I've ever heard positive things about. Yeah, you can even see, like... You can even see, look at the 2% depth, 0. Like, there's no liquidity. This is just like a weird bot thing. There's probably like $20 worth of orders up to that, and some bot bought it up to trap FOMO longs. I wouldn't touch that. It is wild to see that on here, though. All right, I think we've got through a bunch of charts today. We got the FOMC meeting. We've kind of outlined what we're looking for here on Bitcoin. It's pretty good. It's pretty good. This just caught my eye. Do not love the, do not love this, but that's okay. Gotta get rid of a bunch of these things. You know what I can do, actually? Just save this, make a copy. There we go. Okay, so this actually looks like a pretty clean, broadening wedge here. So we don't really love this because we would typically look for something like this. So don't love it. Probability on this pattern would definitely be looking to the downside. But we've seen some bullish price action. It's not impossible to see the opposite, a bounce off the top of the wedge. While this favors a break to the downside, you know, maybe that's 55% to 45%. So if you have this pattern 10 times, 4.5 of them are going to break to the upside, 5.5 of them are going to break to the downside. Probability is tricky. Yeah, that is pretty gross. Well, here's what I'm going to do with our trade. Our Phemex trade we made live in stream. We are long. I don't love this pattern, so here's how I'm going to handle it. I'm going to be watching for a test or a break of 41.2, a test of 40,900. If we get a test of 40,900 and we see a bounce that starts to get sold off around 41.4, I'm likely going to close it. Womp. Wompity wompity. Closing it there, we'll still be in profit about, I don't know, 80 bucks plus our realized 60. Meh. That's a W. It's a W. That's like, I think that's like a 20-something% gain overall. I'll take that as a win. That's a huge win, actually, 20%. But I'm not loving this. Not loving this. And I'd like to see a break to the upside out of this wedge. We'll see what happens. We'll see what happens. All right. I'm not sure we're going to see much spice today. I'm not sure. So here's what we'll do. Make sure you're in the Discord. We're going to do a airdrop here. Check out our sponsors, Market Cipher and Phemex. Links in the chat in the video description below. You've got like 3 minutes to join the Discord and verify. The verify process takes 2 seconds. And you'll get that airdrop. Oh, don't get spicy as I do this. Don't do that to me. And we'll be live again, not tomorrow. Unfortunately, well, not unfortunately, it is the lady's birthday tomorrow, so I will, I mean, Bitcoin will have to move the earth for me to stream under those circumstances. But thank you guys for joining the live stream again. I hope you enjoyed it. We won't be live tomorrow, like I said, unless it's crazy, but the day after, the 23rd, bet your bottom dollar. I'll see you guys then. Crown out.